Active investor here, bringing you another independent analysis. This time we're taking a look at 11 Biotherapeutics, EBIO. Now EBIO has just been killing it recently, but before I get started on that, let me just mention that these are 1 hour candles, each of these candles representing a 1 hour trading time frame. So we have about 2 weeks of trading here, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, yeah, about 2 weeks of trading here. You can see we had our major run up after this trading day. We ran up from about 40 cents all the way to about 60 cents. So a nice healthy 20% increase there. After hours, it really spiked up. It kind of died off. It had a lot of volume this day, but kind of faded down a little bit more. And then it started another run. It spiked up pre-market on this time frame and kind of died towards the end of the day. Spiked up here, carried over after hours actually, and rose a little bit more. But then this last trading period on Friday is when we really had a huge increase. We went from about an open at about 95 cents and we closed at $1.50. Our high of the day about $1.70. Now this green candle is normally going to have a bit of a bearish sentiment since it closed so far below the wick. However, you can see that after hours we did continue running up a little bit. So this is Friday, this last trading day, so we have the whole weekend and it's going to be Monday until we resume trading. But I'm going to be looking for a play on Monday. There's a few things to watch out for though. We don't have any major support because what happened was around January 15th, EBIO went from about $2.30, fell all the way down to 70 cents. And during that day, it actually closed at about 40 cents. So it just got completely wrecked in the middle of January, and that was due to a phase 3 not going too well. And after that, it kind of floated around 30 to 40 cents up until about a week ago when it started this run up. So there's really no news on why this is running. So I'm thinking it's starting to gap up, and it might keep gapping up to that $2.30 area. So I'll be looking for a price target of about $2.15 to $2.30 for a short-term swing on this thing. But some things to be on mind, or watching out for rather, is that because it fell down from about $2.30 to that 40-cent zone, we don't have any major pivot points, so we don't really know where our heavy support and resistance is. So I'm really going to have to base that on the cloud. Now our cloud is really far below the current price. That signals that we're in a strong uptrend. However, it also signals that we don't have any real support anywhere close. This cloud is right around 80 cents, and we closed at about $1.50, and after hours we actually went to about $1.55. So there's no support anywhere close, any major support anywhere close. That leaves us with our Tenkin and our Kaizen lines for the closest support. And on this area we're about $1.36, and on the Kaizen we're about $1.18. So that support is still far below $1.50. So if this thing does pull back Monday morning, it might pull back quite hard. So that leaves you with two potential plays for a swing on Monday. You can buy at the market open, but that's going to be real risky. That I would watch out for how it plays pre-market. If it's running a little bit like 5, 10, 15, 20% pre-market, then it might keep that momentum up as the market opens, and it might not be a bad idea scaling in a position early on. However, if it's running about 50%, some crazy numbers pre-market, that's going to be a little too extended, and I'm pretty sure that it'll pull back to that $1.30 range, maybe even that $1.18 range, in which case I would look for a dip buy there and then a swing as the day progresses. And that's probably what I'm going to be doing, is I like buying as close to support as possible so I minimize my stop loss risk. But you guys really have those options depending on your trading strategies. Let's take a look at our indicators. We got the MACD, and we're still in our overbought area, and you can see where we went overbought. We really started this run up here. So we're still overbought. We can still keep running. However, our MACD is looking like it's going to start lagging down. You can see we're almost crossing bearish on the MACD. So that is a sign to watch out for. However, we're still far above the zero line. So even if it does cross bearish, it's not as bearish of a cross as it would be if it was under the zero line. And we could start seeing it leg up and cross bullish again very quickly if it does indeed cross bearish on the MACD. So just something to keep an eye out for. There's really not much to say about EBIO besides that. I told you guys what I think the upside and downside is and the best potential swing plays to minimize your risk. I'll be watching this for sure Monday, and hope you guys make some money if you do indeed try to play this. Just be real careful, as it could go down and tank pretty hard, like I said, due to the fact that we don't have any major support anywhere close.